guys, and welcome once again to my YouTube channel. As you saw by the title of the video, I just want to show you this swing trading strategy that I actually use for trading quite a number of pairs. Obviously, I focus mainly on gold and US30, right? So I'm just going to deliver the strategy first on US30, then the next video I think I will do gold. But firstly, I would do for US30. Then after I'm done with US30, then I'll move on to gold. So I'm going to start from basically from January this year up until where we are today, just showing you how you could have taken trades applying this swing trading strategy. Also, keeping in mind that it's something that you can actually apply on any other pair of your choice, right? Me just doing US30 and gold. Those are my only pairs that I personally choose. You can even do on GU, EU, whatever. The concept and the ideology will still be the same. So the most important thing, especially once you have structure like this, because here, if you check, this was actually on the 1st of January, right? The most important thing to understand, especially after the market would have broken swing highs like this, the most important thing for you to realize, or the most important thing for you to know, is now how far now can they still go on. So other people, if they want to see how far they can still stretch, someone can come and put a trend line, which is not a problem for them to put a trend line whereby you're saying they're going to touch the trend line, blah blah, then start to drop, blah blah blah, right? Which is not a problem. You can also put the trend line, right? You can also put the trend line. I'll just put it, but I'll also add other confluences that I basically use beyond just the trend line to say how far can they still go. So the trend line is there. Here you can see that this is our swing leg or swing point that has been broken there. So once they have broken structure like this, that's a major break of structure, right? So one thing that you need to understand, one of two things can happen every time when the market would have broken major structure. They can pull back immediately. Sometimes they can even take time to pull back. They can still continue with bullish order flow. They can still continue with bullish market structure and not necessarily pull back to the zone that you'll be anticipating them to pull back on immediately, right? So they might not do it immediately, but they will eventually do it. So looking at this now, having opened your chart like this, adding also another extra confluence, I can also add my Fibonacci retracement from this swing low here to this swing higher high there, so that around these are some of my TPs up there, negative 27%, as well as also negative 61.8. So those are two major TPs that I'll be having, whereby the market can come there, then start to retrace, or even come to the next one, then start to retrace. So those are some of the ways in which I identify levels or where structure can actually go onto even after they've broken my major visible structure. Right. So having done this now on the monthly, whatever, obviously, the most important thing now, the most important thing next to do right now is now identify let me just remove this, my monthly ranges, my monthly buy range. In this case, my monthly buy range, my previous month, it was literally this one. So this one is actually January. This is a January candle. So what I can do, what I normally do, what I actually all the time do, if I'm in this scenario like this, I will basically, I'm basically interested in the previous candle first. Then once we break, even after we break outside of that buying range that would have been created by the previous monthly candle, I'll just still also have, remember, I also have this target. So this one I'll just pin it there. That's negative 27%. Let me just write it down. That's negative 27%. This is negative 27%. Right, let me put it on the top or on the right. Right, something like this, right? That's negative 27% Fibonacci retracement. So that will be my first major TP from this level here. Someone can also come and put maybe a resistance here, which is now acting as a support, which is not wrong. There's nothing wrong with doing that. You can also do that to say the market broke a resistance, so they're now playing above. Nothing wrong with that. Okay. So after I've done all this now on the monthly, If I now go down to the weekly, as well as the daily, all I'm doing basically there, I'm going there for getting now confirmations or entry criterias for the current market where it is now. Right. So this is my monthly buying range, this high and this low, right? It's a buying range according to the what? The monthly. Then according to the weekly, because the only time that the weekly will start retracing is when they even violate the weekly buying ranges. So in this case, so long the weekly buying ranges are still being maintained, we'll still keep on what? Keep on buying. So on the weekly, you can see that this candle, it's basically one candle, that's the high, that's the low. The previous one is literally this one. So someone can also put a candle, a low here to say that is the boundary of this weekly buy range. Even if it plays around and pulls back maybe there, it can still keep on buying and buying, right? So after having done this, let me go down to the daily, like this. So this is the daily. We were going up nicely. Then we made this leg. Then we took out some lows there. So already they've made that a structural leg like this. Then also that is a structural leg. So that is sort of like a break of structure there. So you just need to observe how they are going to keep on moving from that region. So going lower to 8 hour, I believe there is more clear structure as well there. And even whilst you are still there, not even looking at the next price action that happened there, whilst you're still here on this zone, you can see that here we had a break of structure here. We had this break of structure, then here to the left, that's where we had our market structure shift. So, or what you call an inducement or whatever, even what you call the breaking out of your ranges, or whatever terminology you want to use, but still it serves the same purpose of making this a higher low. So remember what I said about market structure. Every time when they break a major leg, a major structural leg, two things can happen. One of them, they can still keep on buying, then retrace later on, or they can even quickly retrace even just a small distance from the swing level. So this is a swing level. Either they are going to start giving us our pullback now, or they'll just keep on buying and buying and buying, maybe tape some of those Fibonacci retracement levels up there before the overall pullback to the downside, right? Then you proceed with your structure. Let me just do this. So we continue. So yeah, even before we get to the next price action, as I said, if you look at this structure here, we made that high, we made this low. Then here, when it started taking out those internal legs or internal candlesticks to the upside, that was actually an opportunity to buy this pair. Where was the opportunity to buy when we took out this internal high like that? So it being a swing trading strategy, even after taking it out like this on the 4 you can actually buy the stop loss slightly below here. Or even if you wanted a smaller stop loss, you could have literally gone to even the 2 hour. Even the 2 hour is still also the same thing. I think 1 hour it's also one and the same thing. So it's not necessarily so that's the level there. I'll just even if you enter on the 2 hour, you're still going to be safe. So even if you ended around here, put your stop loss maybe just slightly below this low, or even just here, or just around there. It's a zone where you know that you're not going to be swept. That's how you could have caught this swing move here from the 21st of December up until the 27th. That was like almost a 6-day move, just holding one position. So in this particular video, I'm going to mainly be focusing on showing you where the main move starts. I've seen so many videos on YouTube where you see people trying to explain a swing trading strategy, but they literally just explain it in one way whereby they can just show it on one specific entry point, not showing you how to scale in. So I'm going to have other videos that I'm going to do that are coming after these ones, where I'm going to be showing you even the scaling in process, what goes into the scaling in process, how do you scale in, where do you scale in. So for this particular one, I'm just going to be focusing on this right. So proceeding with structure, you can see that all our higher lows, internal higher lows, they were being respected. They respected. They also respected that this is a high, this is a low. So they broke the high. That's a high, that's a low. So in this case, already you can mark this low to say if they take out this low, that's when you're going to be much more interested in what? In sales. If you're just looking maybe even on the 8 hour time frame like this, right? Then if you go to 4 hour, maybe you want an earlier confirmation. It's still the same thing also because this is a higher low. This candle slow is a higher low, higher high. They broke there, higher high here. This is a higher low. So long we're still like this. So even if they haven't taken this out, or let me just wait for them to take it out first. So once they take it out, that's when you know that you can now actually what? That's when you can now say you can now start looking for sales. So meanwhile, they could have just waited because already remember they have broken structure there. So what you now need at this point is for them to create a new higher high, for them now to create a after the higher high is created, you now wait for the higher low. Right. If you look at this candle here, before even they broke this, if you go to the 1 hour, where you could have even seen earlier structure. If you go to the 1 hour here, it actually looks like here they came down here, went up, then they came and took out this level. Then they went back up there. So in this case, just looking at this red candle on the 1 hour, it literally was sort of like resembling a change of color to the downside. Then they came back here, then they wiped there. So we can literally even say that was now a fake out there, which happened there to the upside because technically speaking, they were supposed to come and respect this leg. So them closing above, going all the way like this, then closing below like this. So even before the overall move that I'm going to show you, even if you're just playing around within this short-term structure whereby with this internal high, 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 low, high, high, even here where they took out some lows here, in this case, they took out your low here. So even if you took some sales from that region, obviously you were anticipating what? You were anticipating the market to take out this, but they after even after taking it out, they obviously did a pullback. So these are just minor trades. I can't say these ones are swing per se. They are still minor because they had not yet changed there. So even if you bought also around here, still you're going to be fine. So here now, them closing below this region and also taking out a low like what they did here, that was an opportunity for sales. So even if let's say you sold around let's say you sold around even if you sold around here, then you put your stop loss slightly up there like this. Then you come back to the 4 hour time frame, which that's the level there. That's our 1 hour entry. So looking at this structure, you can see that they're still in bullish order flow. So this is still a reversal. That is still a reversal. So which means obviously one of your major extreme or final TPs will always be this extreme zone if they do come there. But if they don't, still you also still be fine because you would have made not paid profit. So even when after giving you those moves to the downside, after giving you all those moves, then already your stop loss was now supposed to be on break even. Already your stop loss was now supposed to be on break even at this point. So here, even if you now put your stop loss to break even, still you're in profit and you're now just waiting for the playing out of price. If they are going to pull back inside like what they did, if they're going to pull back inside like what they did there. So here, if you notice, they literally came back and they took you out, which is not a problem. They could have taken you out on break even, or even if you closed, you could have also been closed on what? In profit. Let me go to the 8 hour. Mm, 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 mm. Right. So if you check the playing of price there on that level, it's so beautiful because they came back to your entry point where you would have still also scaled, re-entered the trade because you're not forgetting that it's still a what? It's still a reversal. It's still a reversal trade. So even if let's say they took you out on break even, for example, on this zone, even if they took you out, let's say after putting that, obviously looking at the 4 hour, this was the level that you're anticipating to be taken out. So them not taking out this level was here. This is just a sweep on the 4 hour, but on the 1 hour, they sort of like did as if they came down, right? So we can literally say that according to 4 hour, they had not yet confirmed the sales. So it means even if they dropped with this candle, you could have even decided to exit down here. How did you exit such positions earlier? There's a technique that I use where, let's say, for example, in this trade, this is the trade, right? Let's say even if on 30 minutes, even if you use 30-minute entry, you could have entered around there. Stop loss obviously is there. Then once as they are respecting this, creating this candlestick internal lower lows, lower highs, lower lows, lower highs, lower. By the time they now come and take out any lower high, lower high, even if it's an internal one like this or even that one, already you could have logged profits, maximum profits there, so that even if they now come back like that, so them coming back like this on the 4 hour, they are simply coming back, obviously, for a retracement, but overall they're now coming down. So even the going up, even if you bought going up, which was not necessary though, but even the sales to the downside, which were the continuation sales, you could have entered them immediately when they took out this low. So when they took out this low, you could have entered even here when they came back here again for a pullback. I think they also pulled back to this level here. Still, you could have also entered other trades there. So roughly, your positions in that zone were basically quite many. That's why I said I'm going to have a session, another session where we'll literally talk about the scaling in part. How do you scale in stuff, all those stuffs. So looking at this position, you could have re-entered it like that, even going as far as the 30-minute. So now, them reaching some of these levels, or even if you put Fibonacci from the bottom to the top, you can literally see that they actually touched 61.8 Fibonacci. So around those levels, you could have even started coming out of your positions because you know that this is still a pullback. It's still a what? A pullback. So many people, the problem that I see people now that they have is one of them is literally the issue of holding too long, especially pullbacks, holding too long pullbacks. So there, even if you exited around here, even if you exited your positions around 61.8, you were still going to be okay. So now going to the upside like this, you can see that they took out our internal highs somewhere around somewhere around where? Somewhere around internally they took it around here. So somewhere around here, that's where the buyers literally um confirmed some things there, looking at the H4. So coming to this level down here on the H1, where could you have entered? You could have even drawn. If you look at this progression to the downside, this is a candle like this. You could have entered immediately here. Entering immediately here, you're basically going to make that profit. And by the time they now get all the way to the top there, you can actually lock your profits by shifting your stop loss to entry, something like that. So if you go to 2 hour, it was also the same similar zone there. Same similar zone. So your first TP is here. And your last TP, obviously, because our major level is all the way up there, you might not use that. You can just use even this short-term structure, Fibonacci extensions, whereby you can even still hold to negative 27. If it breaks beyond, you can look at. So they will just be observing the candles to see how they will be behaving. If they change earlier, it's also fine. You also exit the trade earlier. Something like this. Mm. So even if they come back to this demand, which is this one, right? You could have still re-entered more positions, or even let's say you exited around up there based on the lower time frames, based on a 30-minute. Because obviously your 30-minute before even this pullback begins, they would have literally confirmed that now we are pulling back. So they would have given you the chance to what? To even exit the trade by the time they start to pull back. Then when they're now continuing, you just continue with them once again. So there were two scenarios that you could have used. Either you come out based on those 30-minute levels, or you just keep on holding. But coming out on the 30-minute structure shifts, it's also good because you make profit. Then if it comes back to the zone, like what they did, coming back to mitigate that demand, you are still going to enter the position, but now with a better, much better lot size. You understand? So all this time they played in profit, went in profit, first time came down, went in profit again. So still, by the time they reached this level, let me just refine this. By the time they reached, went up, came down, went up again, which was almost close to this first TP. Still, you would have even came out there because they came, obviously, they didn't break, they came back again. So that coming back again was also actually going to give you signs that we're now potentially going to go down. You understand? Right. So they came back to the same zone, came back to the same region there. Let's look at the higher time frame structure on that zone. So yeah, as I say, they can even come here because this is still one main structure, which is from this leg to that leg. So even if they play around inside like this, they can do something like this. You understand? Another thing also, even the 8 hour before the drop started, you could have even seen it by taking out of this low. When they took out that low up there, you could have gone over slower time frames and started selling that pair from that region up there, even if you entered earlier somewhere around here or even somewhere around here. You're going to make profit, they come back again, then they kept on dropping. So swing trading is something that's beautiful, something that so yeah, you can see that we entered this region, and if we took out this high, it means that's now time to buy. So even if you bought based on the 4 hour, you are still going to be fine there. You're still going to be fine. Somewhere your stop loss, you can just put it slightly below here so that you're not swept. Then your TP1, TP2, somewhere something like this. Something like this. So the candles will just be playing around, playing around, playing around, playing around. So what I like about this whole thing, about this whole methodology, it's a methodology that once you understand, once you master, you become a master, a dangerous, dangerous, dangerous master. So if you notice here, you entered your position there, and the reason why I say don't put your stop loss slightly below here, you can just put it slightly below the whole zone, like what I did here, is because things like this will come whereby they can even come and just sweep you off the whole move. After they sweep you off the whole move, then they go like that. So things like those will happen. They are always happening on the charts if you don't know these things. So these were some of the trades that could have been taken even from, I think this was from, I can say January, obviously late December, which was around 21, 22, and January. This was the whole of January moves and trades that you could have taken the whole of January. So yeah, you can target that. You can also target that, but also observing the candles, how they'll be behaving. But nonetheless, just talking about this, going back to this region, going back to market structure on this whole zone. Your first entry, which you're anticipating the market to keep buying and a break there, was this one, of which they couldn't sustain. Even if you're looking just from the 4 hour, this was a high, this was a low. We broke here, made a high, made a low, made a high, made a low. They were not supposed to take out their low like what they did there. So what they did there was actually a sign that they are potentially now coming pulling back. So even if you go lower to lower time frames, you would have actually seen the whole shiftings earlier, right? You took this initial buy, they went up there, even when they now start to pull back, like taking out some internal lows or even this one, you could have exited your buys, right? Because you know that potentially they are coming for this demand again. So even if you re-entered there, obviously the first target is there, second one is there. Which second one was hit, then after that they started to drop. So you could have still made good profit. Even if you decided to sell, but selling there, it means you're just maybe targeting one of the regions you would have targeted this. Then even if they come to that other one, it was still also just an extra bonus. So going back to the 4 hour. So the 4 hour confirmations are very fundamental, especially when you're going to take swing trades, trades that you're going to hold for days and days and weeks. The 4 hour. So all these other things like your trend line breakouts, your what, those are I can say those are still baby, not necessarily baby. I don't want to mock people per se, But I just want to say there are secondary confirmations that will always come on the charts. Secondary confirmations that you always see on the charts. They're not necessarily the primary. The primary is basically your candles themselves. That's the primary confirmation that you need to know and understand. Once you even SMC itself, I can also include it under secondary, because there are things that even SMC traders wait for before entering or whatever, which is also sometimes it can delay for you to enter, waiting for certain things to happen. Which now when you mature on the charts and you realize the main primary, once you get to understand what is the main primary tool. So if you check here, negative 27 as hit, of which you could have still been holding this trade. That's how many pips. Because here you're targeting 1,000 pips, right? But here already open, that's like 752 pips. 752 pips. As simple as that. 752 pips. 752 pips. Just like that. Just like so now at this point, you will now be observing your candles so that if there's any low that is taken out, you know that eventually at that point they are about to start pulling back. So another thing that I also do, especially after we have been progressing like that for holding a position for a while like that, I can just go back to my daily like this, or even just look at the weekly as well, just to observe what will be happening. On the weekly, you can see that there is no change of structure or anything. Structure is still strongly bullish. They are still pushing and pumping to the upside, so there's nothing that is literally changed, right? Right. So even if I go back to daily, I'm just trying to observe if there's anything new. If there's nothing new, it's okay. Go back to 4 hour and even maybe the 8 hour, also look at it. But still, that was a very successful trade that you could have taken from that zone, from that region there. Right. So looking at this now, they sort of like broke out of a low or broke out of a buying range, potentially presenting sells. They can even sell back into a demand, then keep on buying, right? So going down to the 2 hour time frame, you can also see the same that we took out a low. We're not taking out any lows per se. The only time we took out a low was that one. So that region, it literally presented opportunities like this. So they can actually sell into this zone. So you could have even taken a sell even straight away down here, or even when they started to pull back, you could have even entered your trades, something like this. Something like this. Right. So as they'll be moving, they're just moving within this whole zone. Many people, when they start seeing candles, like some of those candles, the way they'll be almost coming to your stop loss. Some people they freak out and say, what's happening? What's happening? Yet the market will just still be playing around within your overall zone. So it's not necessary for you to act out of emotions, especially when you're on the charts. Professional trading, it's all about you using knowledge, using so remember, this is also a pullback, right, that you'll be taking. And pullbacks, you could have taken pullbacks, but you can also decide to say, I'm not going to take pullbacks, right? You can take pullbacks, you can also decide not to take pullbacks. You can take them, someone can also decide not to take them. So they're just playing around within the whole zone there, still playing around within the whole region of structure. So if you look at this, what happened here? That was a sweep. That was a sweep. Structurally, they are still within your overall. If you check the amount of sweeps that are happening. So this pullback, let me just go back to this. Let me go back to my higher time frame and show you how and why that pullback didn't. So this pullback, if you look at it from the 8 hour time frame, right? If you look at it from the 8 hour time frame, this is one of the reasons why it didn't go all the way. So on the 8 hour time frame, this is a buying range. This low, this high, and that next high. It's all a what? A buying range. So it being a buying range like that. So even if we give confirmations up there for sales and we don't close below that zone. So all this while they were trying to close below that zone on the 8 hour, but they failed. So them failing like that, another sign that they also failed was even if you follow through the candles here, they're supposed to respect the highs, not take out the highs like what they now did here. So even before they went all the way like that, you could have even seen that and even exited this position earlier there because you know that on the what? On the 8 hour, they are failing to break out of a certain zone. And also another thing also, you could have even continued with the buys after taking out that they came back down. You could have even entered buys, targeting obviously that 61.8 level. But nonetheless, those are some of the thoughts or the thought process that you could have literally gone through on that whole position. So they kept on buying and buying and buying. Let's see if they hit negative 100%. So on this zone, I said there are two things that you could have done: exited the sells as well as also continued with the buys just based on that candle shift that happened there. So because of that 8 hour buying range that was still maintained, you could have bought here, stop loss, maybe targeting negative 100. But besides targeting negative 100, by the time the market comes and starts taking out your lows, like what they started doing up there, if you go to 2 hour, 1 hour, you can actually see that where they literally took out those levels earlier. You go to 1 hour, this is 1 hour structure. We have a high here, we have a low, we broke here, then we also broke here. So even if around that level you could have exited, or even just around here, you could have also exited your buys. Going back to structure, which is going back to the daily, you just want to figure out what's happening. So on the daily, you will realize that overall, you already have structure here. You now already have structure in the sense that that's a leg and that's also a leg, which is a higher low. So if the candles take out the low like what they did there, you know that potentially they're now potentially going to sell. So if they sell, potentially you're looking at this demand for the TP, then a continuation, just something like this. So the most important thing now will be going down to lower time frames to see our entry, to see where you could have actually jumped in on that entry. So looking at 2 hour time frame, how could you have jumped on this entry? They literally took out your low around here. So even if you sold, even if you took a sell around this region, on this candle that took out the low, which is something like this, put your stop loss slightly above, like this, or even slightly above there. Obviously, your target at this point, maybe you're targeting something like that demand zone before the continuation. Um, so even if you add all these other secondary confluences, your trend lines, whatever, all those are just secondary confluences, right? As I spoke. So even if you added other confluences like those, you're adding them, but still with an awareness of their role in your trading, whereby they're just secondary confluences. They're not necessarily primary confluences that you look at. They're not necessarily primary confluences, they're just secondary confluences that you can add on to your trading, to your setup, to your whatever. Once you add them, then you just see how they'll be moving. Right. So if you check here, let me go back to 4 hour. Go back to the 4 hour time frame. So on the 4 hour time frame, look at this now. We have this mini structure which is here, which they created here, whereby they had a certain leg, then they started to drop. So here they're also being restricted with this. So let me go even if you go to 8 hour, you can also see that there's still a slight restriction there. Slight restriction of structure, slight restriction of structure from keeping on, going down or keeping on or whatever, going to even the upside. So it is at points like this where your decision-making process should be very sharp. Your decision-making process should be very, very, very sharp because if you're not sharp enough decision-making wise, you basically have a problem. You basically have a problem. You basically have a problem if you're not sharp enough decision making process wise. So trading, I can just to go offside a bit. I can just safely say and tell you that forex trading is basically all about decision making. Once you're able to make your decisions wisely and properly, you will definitely not have a problem as a trader. Most traders right now, they are suffering from poor decision making. Poor decision making. So going back to the daily here, going back to the daily, I just want to show you something on that same zone. I just want to show you that here, according to the daily, we are still in a buying range when we are still in something like this. This low and this high and this next high, that was a buying range. So even those sales, even if you entered them successfully on the lower time frames, you're basically supposed to start anticipating them to break out of that what do you call this buying range, of which they didn't. So even if remember you took the sell around that high there. So by the time they now come down low like this and start giving you reversals or signs of reversals, come back into the zone, you can even exit your sales because of the daily now, which is also still in a buying range. In this case, you would have still what? You could have still bought on the lower time frames because on the daily you're still in a buying range. So this bias could have still you could have still waited because the markets were not yet ripe to deliver it. So going back to this, by the time they took out some highs there, came back lower, took out the highs again, they you could have actually started to take some buys there. You're buying in case they just buy into this supply, then they shift. It means that's your first TP, second TP, maybe you're looking at that. So all of those, you're basically anticipating the candles to shift there. If they don't shift, you can still hold on to those positions, and even holding those positions on, even based on the daily, you would have actually still held further beyond some of those levels. So you just need to exit when the shifts happen. That's why sometimes I say you knowing trend lines alone is not good enough because you'll be limited, especially on certain moments or certain zones where the market will not even go far. So yeah, even if they didn't go that far, them coming just to these levels, like here, coming to these highs like this, even if you exited based on them taking out these highs like this, still that was profit. Still that was what? That was profit. Still that was profit. Still that was profit. Still that was profit. So they kept on playing around. Let me remove this so that I don't confuse myself now of structure. So these are just internal legs that they were giving you maybe something also here. You can also say the same thing here. You can also say the same thing. So even here, to an extent that even here at this level here, when they took out these highs here, you could have also still kept on buying. So remember what I said about the pullbacks. You can decide to take them. Someone can also decide not to take them. Still, you are going to be profitable. It's more, I feel like it's more, sometimes it's even more less stressful to not take pullbacks. Let me just pause a bit. Let me just pause a bit. What am I doing? Right, going back to my structure. If you observe this structure, let me go to the weekly, right? If you go to the weekly like this, we are still bullish. And even if you go down to the daily, you can also see that we are still bullish, right? We are still overally still bullish. But even if we are still overally still bullish like that, we are not confused of structure where we are coming from and where we are going. We are not even confused of structure where we are coming from and where we are going. In this particular case, if you look at this level, they made that a high, a low. So in other words, we can even say, even if we say those are my swing legs, still okay, whereby you have this swing leg, swing leg, swing leg, swing leg like that. So this will sort of like be our swing higher low. Then inside there, what they are just doing, they are respecting bullish order flow. And also on the lower time frames, this what they are doing on the higher time frame, where they are failing to break outside of buying ranges and keeping on respecting buying ranges. On a lower time frame, that's basically what we call the respecting of structure. You'll see that structure moving so well internally, but to the upside. So these are just internal legs on the lower time frame. That's why you see I have these legs. I have these legs here. Every time when they do a 10, that's a leg. That's why even if you took, that's why I said if you took those cells, which are reversal cells, you you hold them based on firstly, if there's a higher time from confirmation. If there's a higher time from confirmation, it means you can hold based on the higher time frame. If there's no higher time from confirmation, you can just hold based on the what? Based on the lower time frames. I don't know if we are together on that one. So right here, you can see that they left a demand here. They left some form of demand right there. So potentially with this demand here, even if you didn't wait for that demand, right? Even if you didn't wait for that demand, like of which they tapped it already. So let me just go to 2 hour and 1 hour before I explain the entry on that demand. Mhm. Right. So if you look at these legs, I spoke about this trade, spoke about the reversal cells. Then yeah, obviously this is a continuation to the upside because that's a higher high, higher low, something like this. I spoke about the candles here. If you look at the shift to the upside, obviously internal, like the whole external leg or the whole external candle is this one, this high and this low. So all of this is still internal, internal, internal. They came down, played around, played around. So around, I think it was actually around, even if you ended late around here, when they now broke above fully like that, still you're going to realize profit from that whole movement. Still you're going to realize what profit from that whole movement. So if you go back to the 4 hour, after you've entered your position like that, it will guide you now on even holding because here that's a high, that's a higher low, higher high here, higher low. So in this case, this higher low and this higher high, that was a buying range that the market was just respecting. So it means even on the lower time frames, even if it looked like it's a pullback or whatever, it was just an internal pullback within a buying range. So even there on the lower side of things, you could have still bought on the lower time frames. Obviously, you're targeting this before the overall coming back down to the downside. So yeah, let me just go back to the 1 hour within that whole 4 hour buying range. Let me just delete all these others so that I don't confuse you. Right. This is our buying range on the 4 hour, right? So even if let's say you waited for this internal leg to be taken out, you could have still maybe bought around there. Stop loss below here, something like this. So what I want you to observe now with this whole overall methodology, you realize that the markets have basically been buying since this bottom. Since this bottom in 17 January, there it's almost 8 February. So the swing part is always once you enter this position from down there, all you can now be doing is you'll be following through, especially on the daily. On the daily, what can make you now exit that trade? You can even exit, for example, the positions that you entered down there. You don't necessarily need to exit here. And even on that minor lower time frame structure, you don't necessarily need to hold to exit there. Even if you exit there, still you're going to catch the swing moves on the 4 hour. You're going to catch some swing moves on the 4 hour, right? You're still going to catch some swing moves on the 4 hour. So going back to where we are, I showed you how you could have entered this position. Then obviously they broke here. After they break this structure like this, after they break this structure like this, Your anticipation is always what? Your anticipation in this case is always higher high, of which they came here already. So your anticipation is for them to break there. And another scenario now, whenever it comes to scenarios like this, another scenario that you can always expect that I just need to teach you that you can even still expect when the markets are like this. It is once we create this higher high, come back obviously high low, then we did this shift obviously for our entry. Then obviously these are actually how many candles are this? One, two, three, four, one, two, three, four. Already this is a swing trade, right? Because a swing trade is any trade that you can hold for more than a day. So all of these are swing trades. So that was a swing trade. And on this zone here, on that zone, on this zone where we are, right? On this zone where we are, this is your TP. TP1, TP2, as I said, remember what I told you about structural TPs. Structural TPs, after they are broken, the market can start to reverse immediately, or it can take time to reverse. So even if you still kept holding this trade, and at this time, by the time they come up there, if you entered just even down here, you can already lock your profits even. That's a high, that's a low. They came, they swept. Then you can just even lock profits lower there. Even if let's say you locked below the low of this candle here, you locked your maximum profits there. Still, you're going to realize profit. Still, you're going to realize profit. Even if you even if you logged even just slightly lower here like this, still you're going, of which TP was hit. So TP has been hit. TP has been hit. After TP is hit like that, we still observe our candles. What broke this structure, this internal structure, this sub-internal structure actually? That's a low, that's a high we broke there with this candle. So this is the candle that broke, and this low has been taken out. So it's low being taken out already. I want you to see something here. I hope some of you are learning something. So if you look at this whole progression from this trace that we entered here to what is now happening here, you can see like the market after leaving this level, it just started to give you those internal legs, internal legs, internal legs, blah, 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 blah. But even throughout those internal legs, those were good swing trades that you could have still entered all the way up until I don't know where they want to reach onto, right? I don't know where they want to reach onto, of which year you can see that that's negative 27% up there. They can get there straight up, or they can just take their time to even get there. It's not a must that they have to get there now necessarily. It's not a must that they have to get there now necessarily, but it's actually something that you just need to pay attention to. So there inside there, you could have taken all these trades from the first of from the time the new year, which is 2024, started in January. These are some of the positions that are available to you. So here, after breaking this structure like this, obviously one thing that people will expect is obviously for them to come back, do a pullback, Nyana, do a pullback, tap a demand, then continue. Like especially this one, which is not tapped. So your your expectation here is after we break structure, pullback, then we continue, something like this, right? Of which they can do that. The most important thing that I need you to learn is once you understand the primary thing to look at for structure, the primary thing to look at for structure is basically your candle. So in this case, the candles, they literally shifted around here. That's where they shifted to go down, to start coming down or to start selling. So this was the confirmation that I just needed for the pullback to say it has now started. So in that situation also, it means if you go lower to 2 hour, right, it's also almost the same zone. And here, if you mark this whole supply area like this, you're marking it so that even if the market comes back in the supply area, it's a zone that you can still enter sales from, because what they've created now is a selling range. They've created a selling range from that whole zone. That's a high, that's a previous high, low. The next low is this one. So even if they pull back, even if they pull back, even if they give you a pullback to this supply area like this, we'll still take ourselves. So some other people, especially people who know about this methodology, some of my guys also who trade using this methodology. Sometimes they can even enter even without waiting for that whole thing to change or to shift, whatever, which is not a problem per se. Which is not a problem per se. You still make profit, but still you experience a little bit of drawdown if they create a huge range uh, within that whole zone. So this is something that I'll be anticipating for them to come, pull back, at least pull back into that supply area. Once they pull back in that supply area like this, like what they've done, they've put back into our supply zone. I can enter immediately myself in that whole zone, or I can wait for even something like this on the 1 hour. Take note of your structure on the 4 hour so that you see that everything that I'm doing is connected. If you look on the 4 hour, obviously this is where the low of our selling range is. That's the high, that's the low. The next low is this one. So we can even say that high and this to this low, that's always selling range. So that even whatever they did there on the one, you can see that they were still playing within a selling range like this. That was a selling range, then they pulled back all the way. Then now we're anticipating them to drop. So you would have even waited for this 1 hour candle to take out that. Besides even the 1 hour candle taking out that, if you go lower to 30 minute, I believe we could have seen even something earlier, some earlier signs. Earlier signs here, the earliest sign that I can see is this one, where this low, internal low was taken out. So there, you would have even jumped to that position earlier because now, based on the 4 hour, we have a lot of room for this trade to go down, and we have levels where we want to touch down there. So in this case, we just want to touch this supply, want to touch this demand, want to touch this demand. Then from there, we can even start to look for what? We can even start to look for buys. We can even start to look for buys around those regions, right? Because they are still bullish. Still pushing bullish. Going back to 1 hour. So that's our sort of like our TP. We're going to refine this on the 1 hour. You can even refine it to something like this, but still your TP will be somewhere around those demand areas like this. Let's play and see how the 1 hour played out. So even if you waited for the 1 hour confirmation, for example, the 1 hour confirmation in this case is this one. So even if you waited for this one and you sold immediately there, still you're going to realize profit because once the market is confirmed that we are going down, we'll be going down. There are not two stories about it. There are not two stories about it. It will literally go down. So trend line traders in this case, what they normally do, especially if the market has been trending like this, one thing that they also don't realize is that if you see the market doing something like this, it will be generating liquidity. After it generates that liquidity, it will it will come a moment where it will take that liquidity. So all of this trend line liquidity, they basically can also wipe it out before going all the way. This is all just trend line liquidity. They can, even after breaking your trend line like this, come tap there, they can still keep on going up. So this is one thing that most trend line traders I've seen, they don't understand or they just miss out on because I don't know. I don't know the reason, right? So yeah, if you play, we have to drop. We have to drop into that demand, then continue. So trend line traders wait for the trend line to be broken for them to enter. But us now, who understand the primary confluence. Pa, you see now. Pa, it even exceeded. I think there was actually news there. So still, that was profit. So now, take note here. This is extreme zone. If you go back to the H4, that's our extreme zones. If you look at this, where is our previous higher low? It's actually this one. It's actually this leg. Our previous higher low is this one. So you can just put a line there. So as you say, they don't close below there. So even if they tap there, so all you now need now to buy the same thing that you waited for to sell, the same thing that you now wait for to buy. So here on the 1 hour, you can just literally wait for So I wonder how trend line traders could have entered this sell because this one candle that literally closed there. Sometimes I wonder how these trend line traders trade without. So you see, ooh, it kept on selling. Wonderful. So all you now need at this point, because it is at this point that you need to understand that the 4 hour, if you look at the 4 hour, it's sort of like a rejection on that zone. So on the 1 hour, all you just need so that you enter a sniper trade here, you just need this internal candle high to be taken out. So once they come and take out this high, the high of this candle, I'm looking at this candle here. Once they take out that high, I'm going to buy. First TP is there. My second TP, I can just put a Fibonacci from this low to that high, right? Like this. Once I put my Fibonacci, then I'll have my negative 27, then my negative 61.8, something like this. So those are some of the TPs that I can also extend onto. So they once they do this, definitely we'll know that we'll just observe over the 4 hour to see if it closed above. If it closed above like this. So immediately when they did something like this, on the 4 hour, you just need to confirm if they closed above. Because if they closed above, you definitely know that on the 1 hour, that was just a sweep of liquidity. This was the confirmation that you just need. So even if I enter aggressively here, even if I enter aggressively, I have the confirmation supporting that particular trade. I have this confirmations supporting that particular trade, even if I enter aggressively, even if I go full margin. You can just play around within all these hours, but eventually I know that we are going to go up. Eventually we have to go up because the confirmation has happened already. Once the confirmation has happened already, we don't waste much time. We don't waste much time. You see now. You see? You just remove this. You see now. Came back again, which is not a problem. Coming back there, it's actually giving me more room because the 4 hour, I think that was actually a rejection there on that zone. Let me check the 4 hour. The 4 hour, it was just a rejection. So it being a rejection on the 4 hour, then the 4 hour takes out its own high like that. We're just keeping on buying, man. So sometimes I'll show you when I release my scaling in videos, how I scale in on some of these trades. It's crazy. You like it. So that was the swing position that you would have entered there, and your targets are still the same. You're still targeting this. Your next target maybe is around negative 27 there. Go up. Boom, boom, boom. Let me just increase the speed a bit. Mhm. So that was a swing trade there. Just put three. Went up. All this is good profit. Even if you decided to close there, still you would have still made good profit. Still made good profit. Still made good profit. Oh, they're just fluctuating, 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 fluctuating. Oh, fluctuating, fluctuating, fluctuating. And the beautiful part about this fluctuation, I can already see that it's a fluctuation that is happening within a channel. This is a channel that you could have drawn, which is a someone can call it a flag, whatever you want to call it, but still, that was a pullback that was happening so that we continue with our overall move. Many people, when they start seeing these channels, sometimes they can even change their overall bias, which is something that, so yeah, even after breaking above my channel, I'll show you in the scaling in video how you can actually scale in those crazy positions. So, Pam, TP hit just like that. TP hit just like that. TP hit. So let me just see if I can also do up until March. Then I'll stop from March. Then I'll continue in the next episode. I'll proceed from March, January, February, March, from March, April, May, June. Then the last one it will be, I think, July or August, somewhere there. so that at least we don't spend much time being here. So once TP is hit like this, the most important thing that I do is always to refer back to the higher time frame. Once I go back to the higher time frame, the most important thing that I want to see, I just want to observe my candles, right? I just want to observe my candles. Once I observe my candles, I just want to see based on my candles what's happening. Based on my candles, what's happening? So even on the 1 hour, you can see that okay, TP was hit. So yeah, you can see that overall we've just been giving these bullish market structure legs, whereby higher high, higher low, higher high, higher low, higher high, higher low. So yeah, if we start reversing from there, that will be a higher high because it's higher than the previous one. Once you now have a higher high, you always anticipate a what? A pullback. So in this case, you can say your TP was hit, even if you exited your trade here. That was a successful trade that you could have held, I think, for I don't know how many days, from the 14th of February to almost the 24th. That's almost like 10 days, which is close to 2 weeks, close to two trading weeks. So going back to the idea where we look back into our candles, they have to report and tell us that now we've turned. So yeah, for an earlier turn, so in this case, once you now have, let's say that's now your higher low, your higher high is there. Obviously, maybe you can have something like this, and they keep on buying and buying and buying. One thing that you must never do as a trader is to assume that what the trend has ended. Never assume that the trend has ended, right? Just flow with it up until where it changes, or up until some of those confluence zones have been reached. So in this case, going back to 4 hour, where you could have literally entered your cells. I have this higher low here. Maybe if this becomes my higher high, what will make this a higher high? It's basically them taking out a leg, right? Notice here, obviously this was a pullback, but even that pullback, it happened within a buying range. If you look at the 4 hour, this low, that high, and that high, this is a buying range. Those that are part of my mentorship class, they are aware of this. That's a buying range. So even if that pullback, it happened within within a buying range. That was a crazy confluence there to understand that even after they broke outside, they could have scaled in more trades. Crazy, crazy, crazy moves. So yeah, we just want to say once a law is been even an internal candle law is been taken out, means that's the beginning of our trade. So yeah, that's a law, that's a high. We broke there, we broke it by this candle. So this candle now, the one that broke this one, its law was taken out. It's different from this one. This one, its law is taken out, but it's still part of this one. So we're still considering this one as the one in charge. But there now, what has happened there? That's actually a confirmation that I just needed to see maybe there. Once I see that, then you can even strike immediately after the whole thing is taken out. Let's say here, after they take out your thing there, even if you sell, stop losses, when it comes to stop losses, personally, I've reached a point in my trading where I don't want to limit myself in terms of profits by giving tight stop losses. Sometimes I feel like people they are limited in that case because you can actually be taken out of a good trade or a good position due to a tight stop loss. So in this case, this is my first TP, this demand. There's also another one below. So those are some of the TPs that I'll be looking out for. Beautiful, beautiful. By the time they come down there, already you can now protect even your positions that you entered up there. Beautiful. They went all the way and hit my TP there. If I just wanted this to become my TP, right? So from there, it means we now need the same thing that we saw here. We just need a high to be taken out. So they took out this high, went up, took out the low. So they're just playing around within this zone. So the buys that you could have taken, even if you waited for these other solid confirmations to the right side, even if you waited for that, then maybe entered upon those ones. But even if you entered upon this confirmation, still that whole trade was going to literally because yeah, once we enter here, your TP is 0% there. That's what you're targeting as your TP. That's your first TP, not your TP per se, but that's your first TP, negative 27, TP2. Then TP3, if it continues all the way up there. But even as they will be continuing like that, one thing that I always do is to follow through on the higher time frame candles, the daily, the weekly. So yeah, they were sort of like going up in form of a channel. You can even draw a channel, something like this, something like this, something like this, right? Something like this. So that was your entry there for buys here. So yeah, the reason why you're just still continuing with that is because number one, you're still in bullish order flow. Number two, the confirmations for buying are already there. So once the confirmations for buying, they've already come. There is nothing to fear about. I see people say, yeah, I was afraid to enter. Fear doesn't work here. We don't use emotions. We basically use logic. We basically use affects. So there you can see it went all the way successfully, but it didn't go obviously in a smooth way, but still it reached our peak. This was just a channel that you would have drawn as well. They broke out of the channel. You would have bought, didn't break there, came back down again. You could have still kept on buying, just like that, just like that. So this was now in March, right? This was now in March up there. That was now in March. So it being in March there, I think I'm actually going to stop there for today or for this first episode. Then the second episode, I'll prove to you or show you how we continued from here because this is was actually in January, from January up until March. These are some of the positions that were basically supposed to be taken on US30. So I'll proceed also on the next structure or on the next episode. I'll continue from there and show you how we proceeded from 22 March, continuing even. I'll see if I can do even up until today where we are. But this was a beautiful session. I hope you were helped. So this is one of this is my swing trading strategy that I currently use. All those secondary confirmations that people are using, I use them as secondary confirmations, not necessarily my primary confirmations. Those are just my secondary confirmations. Even if I run a channel like that, I'm not just I don't just jump in the position just because of a channel, right? Like what I see people doing by once the market touches a trend line, people are jumping in the trade. No, there are confirmations and confluences that I always look out for and wait out for up until they happen. Once they happen, then boom, I strike. So guys, that's it. See you in the next episode. Make sure you're subscribed to the channel. Make sure you like the video. So just to give you a brief a brief summary here of what happened, and maybe a potential also summary of what will happen maybe in the next second episode too, to say, okay, internally there they've just been giving higher highs and higher lows, higher highs. So according to the daily, there was no shift necessarily, or there was no breaking out of a buying range. They were just respecting buying ranges throughout from January up until March for the whole 3 months. So if they are going to break outside of a range, it means that point, let's say this point is the point that is going to break outside of a buying range, because here in this case, its buying range is this one. All of these buying ranges, they were respected. So if it breaks out of that, of which now smart money people now call change of character. Change of character is even a later. It's even a later confluence compared to breaking outside of a range. The market will even literally break outside of a range before it even changes character. I'll show you some of those things. That's why I say it in the beginning. Even smart money itself, smart money concept, it's even it even falls in the category of secondary confluences because it also comes later. There is the primary. Once you understand that, so yeah, if they, you know that if they break out of that, you know that eventually they're coming to change character. You know that already now. That's now your swing higher high. So if that's a swing higher high, it means one of the things that you need is a major swing leg down to that up. Once you have a major swing leg like that, it means you're now anticipating a reversal. On our reversal points, you can draw obviously I have an extreme demand here, which they left out a long time ago there. I was anticipating them to come straight away to it, but due to these ranges that they established, a day, let me tell you one thing here so that you can learn. Let's say here my buying range was, of which my first buying range, before they even went all the way up there, it was this low and this high. So let's say like this high and this low, that was a buying range. So if they wanted to touch this before going all the way up, they could have even came there, dropped from there. Even if they dropped from there, then they touched it. They were still respecting buying ranges. That was not a violation of structure. They could have done that. So this goes to give you a lesson to say, once the market starts creating ranges that are beyond your order block, if they create a range and that range and your order block is far from the from the range that has been created, most times they can continue with the new ranges that they are now creating. Then after they are done creating those new ranges, that's when they can now come back to it. So here, the possibility of them coming there is high because they have a lot of liquidity to wipe here in form of trend lines, whatever, even in form of this channel. So once they break outside of there, they can now start to drop. Come there, then that will be our swing leg. Then we go all the way to the upside, targeting that swing leg. So once you understand the dynamics of structure, you basically become a dangerous trader. So I'll continue in the next episode. I'll continue the next episode. Make sure that you stick and you are here and you make sure that you catch each and every single section of the whole thing. So guys, that's it for this particular episode.